Now's the part of the show where I talk about what I believe is important for individual investors to consider before you make your investment decisions over the next couple of weeks. As you can see here, three topics. And the first one, I'm going to say, yes, we always seem to have this topic, Federal Reserve or FedSpeak. A little different today as we have a bank rate or an interest rate decision coming up at 2 p.m. today. So that's going to be important. Paying a premium for growth or paying a premium on growth. What do I mean by that? I'll get into that as well. And circle back to chip makers. I think a lot of chip makers right now have been sold off for whatever reason. I'm not exactly sure. Perhaps it's exposure to China and all of the geopolitical things that are going on between the US and China. Maybe that is weighing on some of these chip makers. But overall, we've seen the chip makers pull back a little bit. So these are the three topics that I think you should consider before making your decision. So let's move to the first topic here, FedSpeak and the US interest rate or bank rate decision for this afternoon. And today, central bank in the US, the Federal Reserve, will announce interest rates or their interest rate decision, whether it's a hike, whether to pause. I don't think they're going to cut. Most of us believe that they will be on pause, just like the Bank of Canada was on pause at their most rate decision meeting. However, I think, like always, everybody's going to parse through their, press conference afterward when they take questions, when Jerome Powell takes questions from reporters about where things stand on inflation, where things stand on interest rates, and whether or not an interest rate hike is in the cards before the end of the year. The next interest rate meeting will be, I think, at the beginning of November, end of October. And many believe that the Fed could go another 25 basis points. I think there's about a 40% chance of that right now. So we'll see what happens. And I have a couple of charts here that we've seen before in the past. The U.S. Consumer Price Index, you can see here that it's changed, obviously, since the last time we had this chart up. All items or the headline number, 3.7%. And more importantly, what the Fed looks at is the core rate, which is less food and energy, now ticking down to about 4.3%, even though, as you can see here, the headline inflation rate has moved higher, and it's moved higher on the back of higher oil prices. The Federal Reserve actually looks at what they call super core rate, and that actually takes out shelter as well. So I'm not so sure that, as I've said many times, that you could remove shelter and food and oil and get a rate, and that's the rate the Fed should focus on. I think they should focus on the headline number. There's no doubt. To strip out volatile food and energy is very difficult because I think energy especially seeps into every part of our economy. Second chart I have here, Fed hikes key interest rates. We've seen it before. I actually love this chart. Shows you when the recessions came. Obviously, recessions came when interest rates were higher. Now, you'll notice here that the recession that hit in 2008, obviously we had a financial crisis, banking crisis in the US, so not necessarily because of higher interest rates, but you could see when a recession hit, interest rates dropped, and they stayed at that level for quite some time in the middle of that little graph there, and then started to rise again. Coronavirus, the pandemic hit, brought it back down, and now we've seen interest rates surge to about 5.5% in the US once again. So once again, many people believe that a recession could be in the cards. So it's going to be very important to listen to what not only Jerome Powell says today, the head of the Federal Reserve, but what the Fed governors say over the coming weeks, right? You're going to have many press conferences, many meetings. They're going to be interviewed by a number of reporters. What are they saying? Are they saying they're done for the time being? Are they saying one more interest rate increase? I think it's almost, as I said, a 60-40 or almost a flip of a coin, whether they raise rates again before the end of the year. The second topic that I had on that list that individual investors should consider before making your investment decisions was consider paying a premium for growth. And for me, what does that mean? Well, that means looking at the areas of the market that are still growing, and then buying those, or at least some of those investments, for a diversified portfolio, even if those investments have, I guess, or are trading at higher prices. And first one I wanted to talk a bit about is Alphabet. And we'll show a chart of Alphabet here. Alphabet is part of the Magnificent Seven, as we've called on the show. And these are one of the names, one of the largest companies in the world, big cap tech. And for the most part, it's been the big cap technology names that have powered the stock market higher. And so when individual investors are looking to grow your portfolio, and we know the economy is slowing both in Canada and the US, there are only a very few areas of the market that are actually showing growth or showing signs of growth. And one of them is in the big cap tech area, powered by artificial intelligence. And that's something we've discussed on this show many, many times. And Alphabet fits the bill. But Alphabet is trading at around 24 times earnings. So you're paying a high price to buy those shares. But I think it's something you still want to look at, because this is where the growth areas are. And the market and other investors who are piling into these names are forcing individual investors to pay up for these areas of growth. Another stock that I have on the list here to take a look at would be Microsoft. And as you can see, another big cap tech name. Microsoft trades at around 30 times earnings right now. And again, another name that for individual investors, you've done very well in this name over the last little while. We've seen the stock come back or pull back a little bit from its all-time highs in and around $350, $360 in that range. And it's pulled back now into the 320s. But again, paying a premium to get the growth in the portfolio, or to have growth in your portfolio. And lastly, a name that I've spoken about many times on the show, a name that I actually have been putting a lot of money to work in, Amazon. Amazon is a name that I think can still grow. When you look at Amazon, after its big split that it had, the price of Amazon used to be around $170, give or take, trading today at $137. It actually, that's when we took this charts, I think it was just the other day, just yesterday, but it actually got up to about 140, 145 recently. And I think this stock can continue to move higher. Amazon actually trades at a whopping 60 times earnings. And you're thinking to yourself, there's no way I'm going to pay for 60 times earnings. Well, I think a name like Amazon, you have to look at other metrics as well, not just the price to earnings multiple. And I always encourage individual investors to look at other forms of evaluation, looking at it in different ways. You got to look at price to earnings, but you also have to look at their growth rate. And I think the PEG ratio, price to earnings to growth, is even more important than just looking at the PE ratio or the price to earnings ratio. So these three names are three names that I think you can look at. And yes, you're paying a premium, but you're paying a premium for growth. And when you're in a slowing economy where there aren't many areas of growth, I think paying up for growth at this time can make sense. The third point and last point I wanted to discuss, we're circling back to chip makers. And we've talked about the chips companies quite often on the show. Chip companies powering artificial intelligence like NVIDIA. We have a chart on NVIDIA, a recent chart on NVIDIA. But not just NVIDIA. You can look at a bunch of the chip makers, and we'll keep the NVIDIA chart up for a second. But you can look at names like Micron and AMD, which I will show a chart of in a moment. But you can look at Broadcom, Qualcomm, and Western Digital, which just received some upgrades recently from a few firms in the US. These are all the chip makers that once were flying high and now have sold off a little bit. And we have NVIDIA here in front of us. And you can see on the right-hand side of this chart or of this graph that the name has sold off. We got up to about $500 a share on NVIDIA. And today it's somewhere around $430. So could you circle back to NVIDIA, a name that a lot of analysts have $800 targets on? I saw someone with a $1,000 target on NVIDIA. Now, by no means am I saying that NVIDIA is going to go up to those high rates, but everyone is bullish on NVIDIA, a name that produces chips to power the artificial intelligence. Another chart that we have here is AMD. I like AMD because this name too has dropped significantly. Recently as high as 130, 135, now down to just above 100. So down about 25, 30%. Once upon a time, a few years ago, AMD was around $150, $160 a share. And we're all waiting for this artificial intelligence announcement from AMD. Will AMD come up with a chip that is actually cheaper than NVIDIA's chip and be just as good? That's what we're all waiting for. That's what the CEO, Lisa Su, has promised us. And so we all wait on what AMD is going to do and what they're going to announce. So circling back to chip makers, perhaps consider a chip maker. Now, again, not for the faint of heart. A lot of these names that I've mentioned, the two names I had charts on, AMD and NVIDIA, these are all considered medium risk, but make no mistake about it, they will be volatile. So going forward, what should you focus on? Well, you need to focus on the Fed announcement coming up today. Perhaps look at names that have done most of the heavy lifting this year. You may have to pay a premium for some of those names, but I think it's worth taking a look at. And lastly, don't forget the chip makers. They have now come back. They have now pulled back and can be a very good investment for those looking for growth and for those that can handle the volatility.